This is Arthur. Arthur is a practical, family-oriented stickman who works as a senior software engineer. He earns $6,000 a month. Arthur is the epitome of a prudent consumer. He doesn't buy fast cars, he doesn't take wild financial risks, and he firmly believes in protecting his family against life's unpredictable disasters. Arthur recently bought a beautiful suburban home for $400,000 and decided to protect his investment with the highest level of insurance coverage available. Every single month, Arthur dutifully pays $250 for his comprehensive homeowner's insurance policy. He also pays $400 a month for top-tier health insurance and another $150 for auto coverage. In total, Arthur spends $800 every single month, nearly $10,000 every year, just buying peace of mind. For 7 years, Arthur never files a single claim. He transfers his premiums month after month, year after year, believing that if a catastrophe ever strikes, a friendly insurance company will step in and rescue his family. Then, on a humid afternoon in August, the catastrophe arrives. A massive, historic rainstorm hovers over Arthur's town for 3 straight days. The local drainage systems overflow, and thousands of gallons of water rush down his street, bursting through his basement windows and flooding his main living space under 3 feet of murky water. Arthur's hardwood floors are completely destroyed, his furniture is ruined, his electrical systems are fried, and severe black mold begins spreading across his walls within 48 hours. The total restoration bill estimated by professional contractors comes out to a staggering $75,000. Arthur remains surprisingly calm. He stands in his flooded living room, pulls out his smartphone, and dials his insurance representative. "Hello," Arthur says with confidence. "My home has been severely damaged by the storm. I need to file an urgent property claim for $75,000. The representative takes down his information, assigns a claim number, and promises to send an official corporate adjuster to inspect the damage. Arthur feels relieved. He believes this is the exact moment his 7 years of loyal premium payments will finally pay off. 2 days later, a stern claims adjuster wearing an expensive suit arrives at the house with an iPad. The adjuster spends 20 minutes looking at the water lines on the walls, takes a few quick photos, and steps back into his car without saying much. 48 hours later, Arthur receives an official certified letter in his mailbox from the insurance corporation. Arthur rips open the envelope, expecting a check for $75,000. Instead, he finds a single page of cold, legalistic text. His claim has been denied in its entirety. The payout amount listed at the bottom of the page is exactly $0. Arthur's heart drops into his stomach. He feels a wave of pure rage and confusion. He has paid nearly $70,000 in insurance premiums over the past 7 years. How could a company take his money for nearly a decade and then completely abandon him when his roof collapses and his home is destroyed? Arthur is about to learn the darkest secret of the global insurance industry. Insurance companies are not in the business of helping people in crisis. They are massive financial institutions engineered to collect guaranteed premiums while using aggressive legal loopholes to minimize or reject legitimate claims. Today, we are going to expose the hidden mechanics of insurance claim denials. We will show you how insurance adjusters use fine print exclusions to void your policy, how health insurance companies use automatic algorithm rejections, and how you can protect your family from paying thousands of dollars for worthless paper promises. Arthur immediately drove to the regional headquarters of his insurance company, holding his policy document in his hand. He demanded to speak directly with the head claims manager. "I have paid you $250 every single month for 7 straight years without missing a single deadline," Arthur shouted, slamming the denial letter onto the desk. "My living room is completely ruined by rainwater. How can you deny my claim?" The claims manager picked up the policy contract, flipped to page 42, and pointed his pen at a tiny paragraph highlighted under subsection 12. "Mr. Arthur, your policy covers water damage caused by wind-driven rain entering through a damaged roof or broken window," the manager explained with a cold, practiced composure. However, the adjuster's report clearly indicates that the water entering your basement originated from ground-level surface runoff caused by rising water tables. Under Section 12, Exclusions, Paragraph B, water originating from ground accumulation is legally classified as a flood, not storm damage. Standard homeowners insurance policies explicitly exclude flood damage. You were required to purchase a separate, standalone flood insurance rider for an additional $1,200 a year to be covered for surface water. Therefore, your claim is legally invalid. Arthur stood frozen in disbelief. He had assumed that comprehensive homeowners insurance meant protecting his home against all natural disasters. He realized that the insurance company had designed a deceptive semantic trap. If water hits your roof first, it is covered. But if that exact same water touches the grass in your yard before entering your basement, it is classified as a flood and rejected completely. 6 months later, Arthur faced a second financial hit. His teenage son developed a sudden, acute medical condition, requiring an urgent surgical procedure at a local hospital. The hospital bill came out to $45,000. Arthur submitted the claim to his high-tier health insurance provider, assuming his monthly $400 premiums would cover the emergency operation. 3 weeks later, another rejection letter arrived in his mailbox. The health insurance company refused to pay $40,000 of the bill, citing that the attending surgeon was an out-of-network specialist and that the procedure was not pre-authorized 48 hours in advance, despite it being a sudden medical emergency. Arthur realized the terrifying reality of modern corporate insurance. Millions of working families pay thousands of dollars every year for insurance policies, believing they are buying a reliable safety net. But when a real crisis occurs, insurance companies deploy teams of legal experts and automated denial algorithms designed with one primary goal: protecting the corporation's profit margin by denying claims. In fact, major health insurance companies now use automated software algorithms to review and reject thousands of medical claims in seconds, without a human doctor ever reading the medical files. Arthur was saddled with over $100,000 of combined property and medical debt, despite spending nearly a decade paying for high-tier coverage. Refusing to surrender to corporate bureaucracy, Arthur decided to fight back using the legal system. He hired an independent public adjuster and a consumer defense attorney who specialized in insurance bad faith litigation. The public adjuster conducted a meticulous multi-page inspection of the house, proving that wind damage to the roof shingles had allowed rain to penetrate the interior walls before pooling in the basement. Meanwhile, his attorney filed a formal administrative complaint with the state insurance commissioner regarding the health insurance denial. Faced with official state regulatory scrutiny and the threat of a high-cost public lawsuit, both insurance corporations backed down. Within 4 months, the property insurer agreed to pay $65,000 for the storm restoration, and the health insurance company quietly settled the $35,000 surgical balance. While Arthur ultimately recovered his money, the bitter struggle taught him a vital lesson. Buying an insurance policy is not a guarantee of protection. It is merely an invitation to a legal contract. If you do not actively manage your policy and understand the system, you are paying thousands of dollars for worthless paper promises. How can a regular, smart stickman protect their family from insurance claim denials and ensure that their coverage actually works when disaster strikes? You must live by 3 defensive rules. Rule number 1 is the strict exclusion audit. Never accept a sales brochure as an accurate summary of your insurance coverage. Before you sign any policy, flip directly to the section titled Exclusions and Limitations. Identify every scenario where the company legally refuses to pay. If you live in an area vulnerable to heavy rains, earthquakes, or sewer backups, buy specific standalone insurance riders to eliminate those coverage gaps before the storm hits. Rule number 2 is the immediate public adjuster strategy. If you experience a major property loss exceeding $20,000, never rely solely on the insurance company's internal claims adjuster. Corporate adjusters work directly for the insurance company, and their primary job is to minimize payout liability. Hire an independent, licensed public adjuster who works exclusively for you. They will document every single item of damage, draft an accurate repair estimate, and negotiate directly with the insurer to secure every dollar you are owed. Rule number 3 is the self-insurance safety cushion. Never rely entirely on insurance policies for financial survival. Maintain a strong, liquid cash emergency fund sitting in a high-yield savings account, equal to at least 6 months of living expenses, plus your highest policy deductibles. Having real cash in the bank gives you immediate leverage during a crisis, allowing you to pay for urgent repairs or medical care without being forced into high-interest credit card debt while fighting corporate bureaucracy. Arthur now manages his family insurance with laser-focused discipline. He reviews his policy exclusions every year, keeps detailed digital inventories of all personal property, and maintains a dedicated emergency fund. He no longer views insurance companies as benevolent safety nets, but as strict legal counterparties. True financial peace of mind does not come from glossy promotional promises. True security is built on meticulous contract awareness, independent cash reserves, and knowing exactly how to defend your rights when disaster strikes. Stay vigilant, read the fine print, and never let an insurance company take your premiums without delivering full protection.